Good afternoon. This is Deborah Pratt Johnson Burns, and I am the founder of Literacy to Legacy Mentors, Reframing Your Financial Future. I am a financial educator and mentor and have been doing so for 30 years. Wanted to share with you this evening that for the past 6 months, I've had several very astute and interesting speakers on a number of topics, including estate and trust planning, tax strategy, and college financial aid strategy. And tonight I have Fred Valachi. He is a 20-year veteran estates and trust attorney. He is also a premium luxury real estate broker and counsel. And tonight we're going to talk about how to maximize your assets for year-end tax planning. And you think you know all of these little tricks that we learn as we grow older about how to maximize your assets and save, your money for your legacy and for your charitables, et cetera. But I can assure you tonight, you're going to hear some new things, and it's going to be really, really exciting because you're going to find out at our final presentation for 2021 how to really look at the current environment, which, by the way, is a very high inflation one, and how to really look at your money differently. And that's really what I'm all about, how to reframe your financial future. So tonight, I'd like to talk with Fred a little bit about, what is it that people come to you for? Like, what is the goal of their meeting with you? And when in their life and what time in the year do they come and meet with you?
Well, Deborah, good evening, everyone. And Deborah, thank you again for hosting me. I'm glad to be back. It's a privilege and an honor. And estate planning has been a big part of my life back to childhood. And we talked about in previous appearances about the need for an estate plan. Pretty much anybody 18 and over should sit down with an estate attorney in whatever state you live in and just express your wishes. I mean, it could be something as simple as a will, power of attorney, simple healthcare documents, and that's something that absolutely everybody should have.
Particularly in a COVID environment.
Absolutely. I mean, we talked about in one of our previous segments, the average age of my clients here in Florida, this is where I've been practicing since 2002, has been somewhere 65, 75, and basically mostly retirees. I mean, the last almost 2 years, my average age we've talked about went down some 20 plus years. I mean, I'm doing estate plans now for people who are in their 20s that are younger than I am.
Very encouraging.
A lot of it out of necessity because people are afraid with the COVID environment and legacy planning and healthcare directives and guardianship for children and trusts if necessary.
Sure.
And these are all things. And a lot of times people come to me without anything. It's, it's like people don't want to go to their dentist. They don't want to go see their trusts and estates lawyer. It's like I'm usually somewhere on the back burner. But I like to tell people that meeting with me is just as important as getting an annual physical from your physician, just to make sure that all your ducks are in a row as trusts and estate law and tax laws change all the time. I mean, it makes us crazy, but it also keeps us on our toes, and it delivers value for our clients because we're on top of all this stuff. So we can do all this stuff. We can mind the store for you while you go out and you work and earn a living and enjoy your family and play golf or, hopefully have some fun despite this COVID environment. We're watching all this stuff for you. So typically,
that's great.
I reach out to my clients usually end of third quarter if I haven't seen them in, a few months, whether I drew up their documents, 15 years ago or 5 months ago, because things are always changing. And it may not be the first thing on your mind, being that the mind of the client. So it's my job to reach out to you, my clients, and just see if there's any changes. And it's always worth coming in and talking, especially if there's maybe been a new marriage or a divorce or a death in the family of a beneficiary, or birth of maybe a child or grandchild, or
Right.
acquisition or disposition of assets, change in health,
Yes.
change in financial circumstances. I mean, either, maybe a big windfall from a sale of something, or an inheritance of your own,
Yes.
or perhaps, some sort of unfortunate loss or situation. But there's ways that we can maximize and mitigate. So we just want to help everybody stay on top of everything. That's my goal. And also, if you purchase property, say in a new jurisdiction, like, maybe you've lived in Connecticut your whole life and you've just bought something in Florida, well, you need Florida documents. Would make life a lot easier. So
Yes.
this is where I come in. I do free complimentary 30-minute consultations, Zoom, in person in certain markets in Florida, as well as phone, whatever works for you. We want to make it as flexible and easy. I mean, coming to see me for a complimentary 30-minute consultation could end up saving you thousands, if not hundreds of thousands or millions of dollars, even for the small amount of money that I will charge for a trust or estate plan that'll cover your bases. That's my job. My job is to save you money and to provide a lasting legacy for your family, your beneficiaries, that will serve your needs and serve them for generations to come. And
Absolutely, Fred. Thank
unfortunately,
you. Thank you for that. I also wanted to add that I'm sure there are many people viewing this video tonight and other times that when they pop into my event replay section of my website, I have all my speakers there, and they think about, well, I just want to go on LegalZoom. Like, I don't want to spend the money. I don't want to talk to this guy about
that'll
whatever. And the comfort level, I might add, in really developing a relationship like you would with your doctor and your dentist and any other meaningful relationship in your life that is of a legal or financial nature, your money manager for that matter, those relationships are critical in your life. And I
Absolutely.
think to have them, especially in times of trauma and stress, is perhaps one of the most important relationships you can have. So I want to make that plug for having a trust in the state attorney. We do. We didn't have one prior to our daughter being born, frankly. There wasn't any real need for it necessarily. But she was born, then I saw them again 15 years later, and then I saw them again when she graduates from college. And, there are milestone moments for people to go and see their, trusted estate attorney. Can we talk a little bit about the current estate tax sort of situation and the maximizing the current exemptions and transferring assets maybe into a revocable or irrevocable trust? Let's talk a little bit about that, if you would.
Okay, well, great topics and very hot button issues.
Right.
Unfortunately, the estate tax situation is one that has always been in flux.
Mm-hmm.
Currently, the exemption, which means the amount that you can leave to your beneficiaries tax-free, and the estate tax at this current moment is 40%. So 40% of the value of your estate over the exempt amount. The exempt amount is currently $11.7 million. In 2021, it's going to go up to just over 12 million in 2022. So for a husband and wife that do proper planning and take advantage of what we call a marital credit that you can use, you can actually double the exemption to your family beyond the husband and wife. So you're looking at basically a $24 million exempt estate, which is substantial. I mean, that's basically only 1% of estates at this moment are taxable. However, I mean, 24 million or 12 million seems like a lot to you. We got to put this into perspective. And this is another place where I come in and, just highlight, underline. This is up for debate. It's up for discussion. If nothing is done, the current estate tax exemption, which is indexed for inflation, and it'll go up something like 12 million next year, 13 million the following, 14, whatever. In 2026, it's supposed to sunset and go back to just $5 million. And $5 million may be a lot of money for you. I mean, it is for me, but for many people, that brings in a much larger percentage of estates.
Yes,
so,
that's very true.
People that might be thinking that everything is hunky-dory now, very well may not be the case, and is also up for consideration, actually bringing the exemption down to 3.5 million per person. So $7 million. So a lot of people in this inflationary environment, if you own real estate or a stock portfolio, or, sold a business or whatever,
Sure.
those numbers are not that high for what I see in who I work with in my practice. So not that many of my clients are dealing with, over 25 million, but a lot of people will be impacted at the $5 or the $3.5 million level.
Thank
So
you.
if you think everything is great today, it may not be next year whenever they pass this legislation, or if they choose to do nothing. But it's my job as your attorney and trusted counsel to hold your hand through all of this, explain everything to you, and show you ways to legally mitigate all of this and to protect yourselves and your families. So
Yes.
there are
Excellent
ways
point.
that we can take advantage of
Can I just
the
add,
current
Fred?
12 million.
Thank you. I'd like to add, I happen to like, I'm making a little plug here, I'll admit, AARP magazine. And you only have to be 50, by the way, to get AARP magazine. So keep
Oh, I
that.
get it. I'm 45.
There you go.
I don't know
But
how
the
they
title
like me.
of, I just got it today in the mail, and the title is Protecting Your Assets. So this particular conversation, which I love all of my partners and friends to be very relevant and timely, which they are. And that's really a hot button right now for most people. They're really looking to protect their assets and trying to maximize them as best as they can. Frankly, we know today the Federal Open Market Committee met, and basically they're going to be increasing the Fed funds rate, it's called, which is basically the interest rate, 3 times in 2022, 3 times in 2023, and that should equal 2.5%. Now, that doesn't seem like much, but we've been in a 0% environment for many, many, many years,
Yeah.
right? So could we talk a little bit about, again, maximizing with all of that in context? Tell us about gifting, tell us about the paying tuition and what that all entails.
Absolutely.
Let's talk about first the gifting. So thank you. Take us through that if you would.
Okay, so currently in 2021, any individual US taxpayer or citizen can gift free of taxes, that you don't have to pay it, the beneficiary doesn't have to pay it, $15,000 per individual. So if I have 3 children and I'm married, I, as well as my wife, can give $15,000 to each of our 3 kids.
Okay.
So that's the 2 of us giving $30,000 tax-free to our kids. Now, if we have 10 grandchildren, we can each give $15,000 to each grandchild. So each of us, that's $150,000 out of our potential taxable estate, tax-free. We can give a lot more than that if we want.
Sure.
Now, the 12 million that we talked about that is currently tax exempt from estate taxes per person, and 24 million per married couple.
Yes.
So there's a couple of things you could do to take advantage of that now, because odds are they're going to reduce that amount, whether by passing or changing the law or by doing nothing. That amount is going to come down.
Okay.
And in an inflationary environment, we really need to cover our bases here.
I agree with you 100%.
So you want to get this money either into irrevocable trusts that can't be changed, get them out of your estate. And, we don't have the time to talk about all of that tonight, but
next year,
design trusts, custom tailored to every individual, multiple trusts for different beneficiaries to get this out of your estate. So if you have a $12 million estate exemption this year, and it goes down to 5 million next year, you want to get the 12 million out now.
That's
because
right.
they're not going to pass it retroactive, but they're going to penalize you. So
right.
you can get that money out now and save that from the 40% tax by Uncle Sam. And also the same thing with the gifts. The estate and gift tax is what they call unified. It's a unified credit. So currently each individual has roughly $12 million unified estate and gift tax exemption for lifetime. So if you decide to give somebody $1 million, I can give Deborah, I could give you $1 million. Now, 15,000 of that is tax exempt. Nobody has to pay taxes on that.
Okay.
there would have to be taxes paid on the 985,000. However, there doesn't require any tax if I would have to file as the donor, the gifter,
Okay.
a gift tax return with the IRS. It's required for anything over $15,000
Okay.
in a calendar
That's good to
year
know.
to a
Thank
person.
you.
So I can give you the million, the 985 would be taxed or taxable, but if I file the gift tax return and opt to apply a portion of my $12 million current unified gift and estate tax credit, there would be no tax.
Okay.
So what happens is there would be that much less, there would be $985,000 less off of whatever taxable estate I might have.
Mm-hmm.
So the good thing about doing this now is the exemption amount, the exempt amount is a lot higher than it's probably going to be 1, 2, or 5 years from now. So if you
That's
gift
right.
stuff now and use your credit or put it into an irrevocable or irrevocable trust now, you're taking advantage of exemptions that are not going to be available to you in a year or 2 or 5 years. So
That
you
is
want to take advantage of
excellent.
this now. So it's like
Excellent
people
point.
ask, like, when's the best time to do it? The best time to do
Now.
it is today, now. You want to do it now. So, and you, Deborah, great point about tuition. On top of gifting, taking advantage of the 15,000, which is going to be 16,000 on January 1st per
Okay.
beneficiary per year per person. So it's like I could give somebody, if I didn't give them 15,000 this year, I could give it to them on New Year's Eve. They come over for dinner, they stay the night. They can wake up in the next morning, I'll give them 16,000 and there's no taxes.
Wow.
I really gotta
That's
like them.
fabulous.
I'm not in the habit of just handing
Come
out
on
money.
over. No, I'm
If
like,
you got a lot of money, I mean, say you've got 29 grandkids and a big estate and you want to reduce your tax liability,
right.
give the grandkids each 15,000 this year, give them 16 next year. Consider things like irrevocable trusts and taking advantage of your unified tax credit for estate and gift. But
I
as
have
far
one
as
question.
tuition goes, yeah.
I have one question before we get to the tuition piece, and I just thought of this as we're talking. Could you give stock or other assets in addition, like as part of, like it could be a cash mix of stock and property and something else? I realize 15 is not hard to get to, but could it be a mix of things? Does it have to be cash? Tell us a little bit about that.
You can transfer other things, but it's based upon the value, of course.
Oh, yes, I understand that. Okay.
So that's, I mean, it's more of a question for the CPA, but
okay.
you could transfer other assets. I mean, you could transfer a residence, real estate, tangibles, intangibles, et cetera. It could be property, it could be.
You have a
stock,
ring, you want it, you have it
bonds.
appraised.
Yeah, I mean, stuff like that.
Okay.
I'm definitely ways to do things. And there are also a lot of legal mechanisms to lowball value that are legal as far as like limited partnerships or LLC interests and
Yes.
lots of ways to work it depending on your individual circumstances. So that's really what things like LegalZoom and going to like Office Depot and Staples and people, drawing up their own stuff, they're missing out on all this advice. Plus they can call an 800 number and pay whatever, and they're not going to get state specific or family specific advice. These are people that are just paper pushers and,
That's right.
probably paralegals and people like me really sit down and get to know you and your circumstances. And we take the time, just like a comprehensive physical. I mean, we're not going to do this in 5 minutes. This is something that we take the time and the effort to make sure it's done right and that you're comfortable and that we maximize every advantage that you can possibly have.
Well, I think it's, like one of the most important relationships in your life. I mean, that's a fact. So You get what you pay for. Make the investment in your family, in yourself to do this, and don't wait till you're 55. Do it at 18.
You've worked hard for your money or your assets and you love and care about your family and you want to protect and preserve. I'm the best investment you can make for relatively a very small sum of money after the free initial consultation.
Absolutely.
You sit down with somebody like me, whether it's me here in Florida or somebody else in your jurisdiction.
Sure.
But you need to sit down with a trust and estate attorney and just go over everything and let them walk you through it, because there are a lot of legal strategies that can maximize your wealth preservation and legacy planning. And there are a lot of pitfalls. I mean, I've seen people come into me with documents, or even beneficiaries show up with a will that would not be admitted to probate
Oh
because
boy.
there was only
Oh
one
boy.
signature. Oh, they did it themselves and they thought they had it all.
Right.
It was paper clipped and pinned on the refrigerator. The person knew they were going to die, but it was right there for for the son or the daughter to see. And it's
Right.
like the court won't admit it. So then you go through a whole probate and intestacy process, and maybe the court's going to have to make the decisions. It costs money, it takes time.
Right.
There's a whole issue with creditors, a whole lot of nonsense that you don't want to have to deal with.
Absolutely
I mean,
right.
on the smallest, most simple estate, if the documents aren't right, you're going to have a lot of headache, heartache, and expense. And I hate seeing it. So I
I
want to
agree.
help you avoid.
Thank you. Tell us a bit, sorry if I interrupted you. Let's talk a little bit about paying tuition and how that is a tax deduction.
Tuition is one of my favorites.
Yeah, let's talk about that, because a lot of us are in that boat,
I mean, so many have children and grandchildren, nieces and nephews, and if you're well off enough, I mean, that you're able to do it, and feeling generous, and you have children, grandchildren, nieces, nephews, whomever, that are dedicated to furthering their education, college, undergraduate, postgraduate.
Right.
I mean, I was fortunate enough that my dad paid for college. I mean, back in like 1995, it was probably like $40,000 a year. I mean, he could pay that directly to my college, Emory University at the time, or any university, and
Okay.
that's tax-free. That's not counted against any gifting or anything like that. I don't have to declare it on my taxes, none of that. So you can pay tuition for not just college or graduate school, also for like preparatory school,
Okay.
parochial school, whatever. I mean, and I know people in the Hamptons that are paying some $75,000 per kid just for private prep school.
Yes,
I
that's
mean,
true.
New York City, I mean, down here in Florida, you're talking $30,000-$40,000 a year per kid. I mean, it's insane. So this stuff, I mean, maybe the parents, maybe your children can't, afford, but they want their children to go to the best
Of course.
schools. And instead of taking out loans and saddling themselves and everything else, I mean, if you're able to, and you have a sizable estate and you feel like doing it, I always encourage clients to consider paying for tuition or educational expenses, as long as they're paid directly to the institution.
Yes.
That's limitless. That's tax-free. You're allowed to do that. Nobody
For
has
all
to
4
declare.
years?
All 4 years. I mean, the kid could be in school
Wow.
till they're 50. You could,
Right.
if somebody wants to pay that, you can have a perennial student there.
That's
If
true.
you're willing to pay for it. I mean, you could have somebody go for, have more degrees than a thermometer. It's fine. That's one way. And I love it because, and I mean, my mother and stepfather paid for law school, so that got me here. I mean, that was $100,000 20 years
Sure.
ago. And,
Yes.
I'm grateful for it. But I mean, I know colleagues today, in their 40s that are still paying student loans.
Exactly.
And,
Exactly.
it's a
hard.
wonderful thing to do. And I encourage my clients to, on top of just your estate planning and your gifting, that if you have the means, the resources to do so, and you have people in your life that could benefit from tuition being paid, to consider doing that. I mean, it's a great way to actually see the benefit of your generosity in real time while you're alive, as opposed to waiting to leave it to people.
Right.
You not only get it out of your estate, there's not going to be any tax on it. You can actually watch your
Great.
children,
I love
grandchildren, nieces, nephews, great-grandchildren, whomever, benefit from this, further their lives, advance their careers, get an
That's
education.
great. That's
I
just
mean, you
great.
can go to the graduation. I mean, there's nothing better. I have clients that, I mean, they call me up and they're in tears. It's like my
Oh,
granddaughter just graduated from Columbia. And, I made that possible, and I didn't even know I can do that. She was applying for loans and she got scholarships, but
Oh.
there was still a lot of money. And it was like, we're so happy that we were able to do it. And she's there and we were able to help her. And it's just like, it's a wonderful feeling. And it's just like,
that is. That's wonderful. Tell us a little bit about year-end planning. We're going to wrap it up pretty much here. What does that entail with regard to financial planning, big picture, micro, macro, charitables, IRAs, 401ks, capital gains, capital losses, all those fun things? Could you tell us a
All of
little
it.
bit about that?
Well, really, ideally, I encourage people to sit down with me and their CPA and their financial planner, get all the ducks in a row. I mean, preferably
Yes.
before December 15th. But if you haven't done it yet, there's still 2 weeks left in the year. It's a good time, pick up the phone. If you have a portfolio, you have a CPA, if you are able to take advantage of offsetting capital gains and losses, that's something to talk to your financial planner and CPA about, because
Mhm.
the tax year is coming to an end. And if you sold anything after January 1st, you won't be benefiting until 2023.
Right.
So, if you have losses or you have gains and you want to offset them, this may be the time to do something. I mean, the market has been in great flux this year, and it's just something to consider doing. Also, consider IRA contributions, 401k, matching plans with your employer. If
Right.
you haven't taken advantage of them yet, it's a good time to get it done. There's still 2 weeks left in the year. It's not too late. Take advantage of this. The gifting, charitable giving, if you want deductions,
Right.
it's just, it's very important that you just not leave anything on the table. So that's
That's right.
why I encourage people. I reach out in September to give people plenty of time. I mean, right now, time is totally of the essence if it hasn't been done, but there is time to do it. And there's a lot of benefit that could be had potentially just by sitting down and, taking a little bit of time going over things like your portfolio and your assets. And if you don't have an estate plan, it doesn't matter what time of the year it is, get one done like
Yes.
yesterday.
So you
That's
have
my advice.
something.
Get something. You want something. You
Mhm.
don't want to leave it to the
Mhm.
state of Florida or Connecticut or New York to decide who's going to get what and who's going to manage your affairs and who's going to make healthcare decisions for you, God forbid, with this
That's
COVID
right.
stuff.
I had a situation with a client, Fred, that his attorney, such as yourself, was older and had passed, and he was in pretty rough shape because he felt very lost. And it's not like this doesn't happen all the time. So if you do have a circumstance in your life that you have lost your attorney by virtue of they've passed or they've gone to another firm and you don't want to go with them, whatever the circumstances are, you don't have one. We highly recommend that you take action on that relatively quickly, because we've seen the nature of the world right now is things are happening lickety split out of left field and a little bit in a sort of traumatic kind of dramatic
Yeah.
way. And my God, the last thing you want to think about is money and taxes and estates. And my God, your people just died or they're dying, or it's a lot of sad stuff going on in the world. And I just highly recommend you are prepared in all ways for
Right.
that as best as you can be, right?
All right. Even if you have documents, if you haven't heard from your trust or estate lawyer in a year or two, you should pick up the phone.
Oh,
I mean,
yeah.
I reach out to my clients. I mean, I can't reach out to you because I don't know your number yet, but you could certainly reach out to me. I'd love to chat with you and
Yes.
help you, but definitely, you just don't know. I mean, we unfortunately hear this all the time nowadays. So, even if you have perfect documents and everything else, there may have been changes in your life and these upcoming pending possible likely changes in the tax laws
Yes.
that affect both gifting and your estate. I mean, your legacy, your exemption. This is stuff that really needs to be addressed now, because once they lower that amount, all of that
It's
extra
gone.
potential is gone and you're not going to get it back.
Excellent
So
point.
take
And
advantage of it now.
yeah, I love it. So tell me, if you would, you're in Florida, as is my tax strategist, John Hayo. So these two know each other and they're both my strategic partners. And I think that's a terrific dynamic duo. So if you do live in the state of Florida, you have two very expert folks to talk to. You have a website, fredbalaccilaw.com, and your email. Would you be so kind as to give us your email address? And then people can schedule consultations with you, or maybe they could do it on your website. You tell me.
Either way, you could reach out to me, info@mynamefredbalacci BOLLACI enterprises.com. Can also call me 561-789-0047. Happy to talk on the phone, schedule a Zoom call.
Mhm.
If you're in Florida, either East Coast or West Coast, I'm happy to meet you in person. Could be at your office, could be at your business or your residence, or even at Starbucks, just to meet and
Exactly.
go over stuff briefly, and then see what we want to do. I mean, I'll bring a questionnaire and be happy to go over everything with you. If you have documents, bring them. I'd love to look at them. I'm always finding mistakes and things that are not correct and need to be changed. And if everything is great, I'll tell you, and you could go on your way. And it'd be nice to chat and have a cup of coffee with you.
Sure.
Otherwise, if you don't have anything, I'm happy to take care of that too. Design a strategy that will maximize all the benefits available to you and give you the peace of mind that you deserve. You
That sounds
worked hard for
wonderful.
your money, and you want to protect and preserve that for your family. That's why I'm here.
Absolutely. Thank you so very much, Fred.
Of
So I
course.
want to say that we are planning a very exciting 2022 with all of my strategic partner network folks. Specifically, John Hayo, who I alluded to as our tax strategist and expert. He's going to be talking on January 26th a little bit about what the new tax laws are and how they're specifically going to affect you and me. He has revealed the new tax brackets, which we're all familiar with. You can just go to see them on irs.gov. And then we're also going to be talking with Fred again several times in the following year, and his cousin, who is a New York trust and estate attorney, and his name is Harold Balachi. Harold will be talking to us about the benefits of opening an S Corp, a C Corp, an LLC, or an LLP. What are the difference in all of those respective designations, if you will? And why would you open them? And what are the benefits? So that's going to be exciting, a date to be determined. And we've also got 2 retreats planned, both in person, hopefully. And that's going to be this late spring and early summer. And then we'll likely have in the fall a panel of experts, of which Fred and John, and we may even do that in Florida, because I'm looking for another excuse to go
Sounds
down
great.
there. So no, I'm going to be down there in October 15th to the 30th. So most likely we'll do a panel Zoom down there together. And we're building that content now. So I just wanted to share that with you all. And if you'd like to reach me, would be delighted to reach you and speak with you about your personal finance or business finance. I've built a lot of companies and helped people become more profitable. And I'm at Deborah@burnscommunications.net is my primary email. Deborah@literacy, LITERACY, tolegacymentors.net. And my website, literacy-to-legacymentors.net. On there, you will see not only all of the content of what I do and how I do it, but also all of my events this past 6 months and all of the replays, such as this one. You will see all of these on my website as well if you didn't have a chance to join us this evening. So thank you so very much, Fred. Very informative, very thorough, as always. You're terrific.
Oh, thank
And
you.
I think people will be delighted to have you as their partner, as I am, and their trusted counsel. And I might add that we're all gearing up for a very exciting Christmas and New Year, and I hope all of you are as well. And the most important thing is to be with family and to love your family and tell them often, because you just never know. So thank you so very much. Have a lovely Christmas and holiday season and New Year, and look to join us in the new year for some exciting new developments, new classes, new events, and a whole new you. So thank you again, Fred, and we will speak with you again in the new year, and I look forward to it, and so do we.
Absolutely, as do I. Thank you all. It's a pleasure, and happy, healthy, safe holidays, and look forward to speaking with you either in person, on Zoom, or seeing you on a future call in the new year.
Excellent.
So all the best.
Thank you so very much, Fred. I will be